Charlie?
I'm very impressed. There are already 37 people here, and there was no link to follow or anything. Evening, Alex.
Are you setting sort of puzzles for your audience now, just to see if they're on the ball?
Yeah.
You're going to upset a lot of the older people. They're still sitting there going, "Where's my link? I don't understand."
Yeah. You're very quiet tonight for some reason. You were really loud last time, but you're a bit quiet now.
Well, you've obviously muted me.
No, I haven't. I can't control your volume.
Is that any better?
Say again?
Is that any better?
Not really.
Oh, fuck.
I can. Can everyone else hear Alex okay?
Yeah.
Can you hear the Stig? Maybe you haven't had enough to drink or something. Maybe you're louder when you're drunk.
How about now?
There we are. That's good. Yeah. Cool. Wow. Did you see the Jeremy Hunt interview, by the way?
I saw some of it, yes. I mean, it's not exactly reassuring.
He was squirming. He didn't answer the questions, the individual question, what should this person do, what should that person do? He just went, well, our policy is.
Yeah. Well, I quite enjoyed when he started to talk about renters.
Yeah, at the very end he did. Yeah, exactly. So, Alex, what I wanted to, and by the way, guys, bring your questions in. And the topic is the economic prospects of mortgage holders. Okay, that's the specific topic of discussion. Oh God, lots of people here. Andrew Lamb, hi there. Leo, Nick Jones, Gary Gilmore, Nick W, Sylvie, Fee, Martin, Samantha Jane. Too many names. Unicorns and rainbows. Someone's called.
Oh, I like that.
Guy Hobden, Samantha Jane Chapman. Hi guys. Matt Lockie, not drunk enough. Ben Wilson, Tom 1991. Hi guys. Annie Anonymous. Hello. Why can't the Stig be Prime Minister? Says Nick Jones.
I mean, so many reasons. No hair, not tall enough. I mean, it's just the way it is.
Also, some great skeletons in your cupboard as well.
No, I have never been found with a plastic bag over my head and an orange in my mouth.
Never been found.
My point exactly.
Nobody saw me do it. You can't prove anything. Or in the immortal words of Shaggy, wasn't me.
Wasn't me. No, it's on the counter. Definitely wasn't me. I'd do my back in.
Right. Okay. You and I had a brief conversation earlier on the phone about how actually surprised you are that wages are holding up as strongly as they are. And I think that's probably a good place for us to kick off here.
Yes.
Because you also said to me that even though you've updated your model with wage growth being actual versus your forecast,
correct,
it doesn't actually change the outcome much.
Well, sorry, it certainly does at the moment.
Yes.
In that the model is working. What I mean by that is I'd made projections that this year, by the end of 2023, we'd have seen a minus 5.1% real terms pay fall.
Right.
But actually, we're only on course at the moment. It's only minus 2.1. Okay. So that the model works. When you change it to minus 2.1, it all matches up and it's still got a good correlation. You go, okay, so the model works. What was wrong was the prediction. Right. And it does make a difference. It does support house prices if people keep getting more cash. And there's an interesting piece at the moment, which is people trying to blame either private sector or public sector workers and who's responsible for inflation and so on and so forth. And I mean, we've covered this in that obviously the government only has control over public sector pay. And they have had much smaller increases than the private sector. But what a lot of people, your audience may not know, or maybe they do, the average, and this is where economics is a pain in the ass because every subject becomes complex as soon as you dig into it. So the average public sector pay is actually higher than the average private sector pay. So the fact that they have had a smaller pay increase does mean that from an inflationary perspective, they are less bad, but they're starting from a higher position.
Yeah.
And again, and people say, well, that can't be true. That can't be true. There's lots of people who don't get paid very well in the public sector. And again, it's because of the averages. There are very few people in the public sector who earn as little as someone working in an Amazon warehouse, for instance.
Yeah.
There are also very few people in the public sector who earn over £150,000 a year. So if you look at the UK, there are very roughly, 340,000 people in the UK who earn over 150 grand a year. Only 10,000 of those are in the public sector.
Okay.
But that is offset by the fact that we have a lot of people in the private sector who earn very, 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 very little, which is why we have so many people working on universal credit.
Right.
Private sector pay has increased since January of 2022 by roughly 10%, public sector by only about 6%. The government can't control private sector pay. Until businesses' profits start to be hit, wages, I guess, will continue to go up as much as bosses will tolerate.
God, that's fascinating insight, and there's a lot of detail. I mean, I didn't even know you had that much detail off the top of your head. That's incredible.
Oh, what can I say? It's all lurking.
Yeah, it
Although I
is.
made a mistake earlier, I need to apologise to Trevor if he's on.
Oh yes,
Because
I saw that on Twitter. Yeah.
I suggested that World War I was not funded by fiat currency debasement because we were still on the gold standard. But of course, they suspended it from 1914 until 1926. So yes, it was the issuing of war bonds. But I have apologized on Twitter. So there we go.
Yeah. Yes. Even the Stig can be wrong.
Yeah, often. Although less so when drunk.
Listen, I'm also I noticed a comment, and I need to address this comment. It's about swearing on this channel. I'm not going to stop swearing on this channel, and neither is Alex.
No,
because a few people have said we'd love it if you didn't swear because we've got children in the background. I'm afraid you're vastly outnumbered by the number of people who find not that they enjoy the swearing, but that you see, it's just how I express myself, and what I have a physical reaction to is anyone telling me what I can or can't say, and I know Alex is the same.
Yes.
And I don't swear all the time, and there are many of my videos where I don't swear at all. But when I want to, it's for a reason. It's because it emphasizes the point I'm trying to make and expresses my feelings in a way that another word simply wouldn't do. Imagine if I said, well, I'm jolly cross about that. I'm I'm really jolly cross. It just doesn't have the same impact. And also, you wouldn't believe me.
No.
Because I'd sound like I was talking bollocks. So this is very clearly my channel it's not for children, and I don't want to swear in front of your children, but please may I suggest either headphones or children at the room, or the fact like my children hear me swear sometimes and I just say those are grown-up words, you can't use them. One day you'll be a grown-up, and it's no point pretending to children that swearing doesn't happen. They're going to hear it. If they don't hear it at home, they're going to hear it somewhere else.
Any child who has shared a car journey with their father is going to have heard some language. I mean, it's that simple.
I've seen some very funny comments.
Yes, I don't fucking like swearing.
Yes, can we all stop fucking swearing? So I don't want to appear disrespectful. I acknowledge the request and the reason for it. And I have given it a great deal of thought, because I don't do it for shock value or anything else. But for me, and a lot of the feedback I've had from this channel's viewers, especially in the early days, was that what people like is that it feels like sitting in a pub talking with your mates, and it feels, as a result, more authentic, and it feels like no one is paying me to control what I can or can't say. So apologies for those of you whose children I've sworn in front of. That is not my responsibility, I'm afraid. I'm responsible for my children. I'm not responsible for yours.
I love this one, Matt Lockie. Swearing is just part of the house buying process. He's not wrong.
That's very, very true.
Especially at the moment.
And someone says mothers swear when driving too. That is also true.
I apologize for my archaic sexism. It's just because I'm old.
Yeah. And thank you very much, all of you, for backing me up here. I don't want to be coarse and vulgar for the sake of it. I don't do it for shock value. Occasionally, I think it adds something to a sentence's construction to have an emphatic in there like that. So yeah, no, but I understand there are people who don't like it and they're offended by it, and I get that. And just if you don't like it, guys, I'm sorry, but I can't change it because it simply wouldn't be me. It would be like someone standing behind me going, "No, you can't say that. You can't say that." And I viscerally can't do that. Do you know, my 1-year-old daughter, Daphne, in 1-year-old language,
who looks like an angel.
Oh my God.
Big
in
blue
the
eyes.
language, honestly, I interpreted it clearly. Today, she clearly said, "Fuck you" to me. And it was in absolutely no doubt. She was trying to pull my glasses off my face. I was like, "No." And she's like, "What do you mean no? I'm definitely going to take glasses." No. And the more I said no, the more she was like, "Fuck you, I'm going to take your glasses off your face." So I think swearing is just a verbal expression of sentiment, which could be expressed in many other ways. A punch in the face is an expression of sentiment. But anyway, enough on that. I wanted to address the people who have been asking me not to swear, because I wanted you to know that I have considered it and thought about it. But that's it. I'm not going to repeat myself. Onwards. What are the prospects for people with mortgages? I saw someone earlier saying, "Do people paying mortgages have any prospects?" Well, that was a dark but funny comment. I mean, yeah, it's a very, very salient point. You know,
well, it depends if that person has a 10-year fixed rate mortgage.
Yeah, I know. I mean, right. There is very little that we can laugh about on this topic, because what we're seeing is it's a bit like a sort of. Did you actually ever see that video of the tsunami in Japan after that earthquake?
Yes, yeah, absolutely.
Of it coming over the land and the cars turning around,
and everything seemed to move so slowly, and yet the crushing force of it just destroyed everything in its path. Yeah, I've seen it.
This is literally what it feels like, and it feels like the disbelief amongst so many people. Yeah. Because there are a lot of people who don't do budgets, and they're going to get the tidal wave is coming from behind for those guys.
Yeah,
there are people who do budgets, and they can see the tidal wave coming. And like I said, I think not doing budgets is a legitimate life strategy. It's a lot more enjoyment to be had, maybe for less time, but no.
Yes.
So yeah, guys, it's a really tough one. I mean, I find it horrible. I mean, what a lot of you don't know is, if you go back to the very earliest videos in this channel, I was talking to councils about the ways in which businesses in the property sector could help with trying to prevent avoidable cases of new homelessness. And I spoke to several councils and people who work directly with homeless people, and lots of people I spoke to. And there's some video of it there, and I learnt a huge amount about the whole concept. And like I said to many people, when Prince William's thing came out recently, I said, no one wants to know about it. It's depressing. Nobody cares. It's not that they don't care. They don't care enough to want to watch stuff about it. And it just subconsciously, people just don't want to know about it. You know? And where are we now? It was 1 week after all the press about Prince William's thing. Nothing. Tumbleweed. Not a single story in the media about it anymore. And I've got a book here somewhere that explains exactly why that's the case.
Well, it's just human nature. I mean, let's face it, people would rather give yards and yards of print to what Kate is wearing than Will's homeless charity.
This is a fascinating book for anyone who wants to understand why things you think in marketing do work but don't, or vice versa. This is it's written by a guy called Ryan Holiday, Confessions of a Media Manipulator. He was paid by large corporations to do deliberately manipulative PR stunts which worked, and it's basically a whistleblowing account of what went on, not just politically as well, and to the point where he saw that you could literally instigate violence with these tricks, and that's when he actually turned and went, okay, time to get out.
Yes, this is a bad thing.
No, there were people who died. There were people who died because of some of the PR stunts that he was behind. and how they backfired. Not accidentally died because of violence.
Wow.
And one of the things he talks about in there is what he said, for example, homelessness is just depressing. Depressing stuff doesn't get clicks.
No.
Stuff that makes people angry gets clicks. Stuff that makes people laugh gets clicks. Stuff that makes people happy gets clicks. Stuff that's just depressing doesn't get clicked, doesn't get shared, doesn't get liked.
No, depressing versus accidental nudity, you know which one's going to win.
Yeah. And so coming back to the topic here, you know, there is a guy who runs the YMCA in Exeter. He's been there a long time. Really fascinating guy. He's actually parents of kids who are friends of our kids, and he's going to come on the channel and talk about it. So it's fascinating. I don't want to go into too much detail here, but he was talking about how this bizarre thing of homelessness is just nobody wants to know about it. He said the hardest thing of all is awareness raising. So people still want to know. Nobody wants to know. Because they're always ready to put your hand out, and no one wants to be talking to people who are going to put their hand out and ask them for money.
No.
On any level. But, you know, he said they have already seen an increase in applications for shelter from people who've become homeless because they defaulted on their mortgage, like suddenly, recently. It's a fascinating process. So, you know, they have massive the number of applications for each spare bed or spare room they've got is way up, and they have this. He said it's the selection process is just the most uncomfortable thing, but they've got no choice. And so, yeah, you watch how many people stop watching when we talk about homelessness. But
yes,
but this is why in that LO video, I don't know if people watching the previous video about it, like. If I found myself in this is me. I am not recommending anyone does this. I am someone with a high risk appetite. Most people don't have one. But I would be if I found myself in a home thinking, you know, maybe it's because I've lost my job, right? And I just no way of keeping up my payments. The law prevents you from having your home taken away until such time as an eviction order is gained.
Yeah.
And so I would go, you know, I would not be paying money out on repayments of loans to big financial institutions if I didn't have enough money for food, for example. You know, you've got to feed yourself.
You've got to be able to eat. You've got to be able to feed your kids if you have kids. There are certain things that you have to prioritize, because let's face it, the outcome of that situation is that you are going to be homeless at some point unless you can find accommodation within the period of time you have in that home. And you'll find it easier to find the accommodation if you have a little bit more money. And the other possibility is that you will end up bankrupt or insolvent. Either way, in the period in between that happening, you need to be able to provide for yourself and your family.
Yeah. Just telling Annie what the name of the book is. You got to do that first and foremost. And in fact, honestly, when it gets to that point, it's like sod the rules. We need someone to sleep. We need stuff to eat. We've got to keep warm. So, well, the question I keep finding myself asking as I watch the news unfolding, you know, today was yet another day of mortgages reaching highest. You know, I think the average 2-year fix is now 6.6%.
Yes.
And you and I discussed earlier, how much longer will rates keep rising for? And honestly, I don't have any strong opinions on this, but other than they ain't coming down before the end of this year. Interest. I don't think we'll see a rate cut.
No, because even if inflation drops away, they're going to be so frightened by what happened in the 80s, as they have been to date, that they will not suddenly slash rates, which is what a lot of people are talking about. They will keep them at whatever level they get to for at least 2 or 3 meetings, just to see what then happens with inflation.
Yeah, because I mean, history shows us that when you ease too soon, it bounces back up. The inflation can come back with a vengeance, can't it?
Exactly.
I also think it's really interesting because I don't think anybody actually knows what the cause is here of it. Is it people with no debts who've got savings, and their savings, the income on their savings is going up because interest rates are going up? Are they promoting inflation? Or is it that concept that phenomenon you and I discussed earlier, which is the private sector starts to see the writing on the wall, and the big institutions, everyone just starts giving themselves big pay rises. Like you told me a story that you knew about in 2008, where actually some of the pay rates in corporations were at their highest
Yes.
during the financial crisis.
Yeah. I mean, from 2007, obviously we knew that there was a massive issue. We're seeing banks falling apart in 2008, certainly, and yet IT contractor rates at certain companies were higher then than they are today.
Yeah.
It was a last sort of hurrah. And then suddenly all of the business flights and all that sort of stuff came to an end, and everyone had to fly economy, even if they were flying to Delhi for a meeting in the morning. And rates got slashed by 20%. And then permanent staff were told that their permanent salaries were going to be cut, or they got outsourced and two-peed across to a third-party organization, and the carnage started. But in terms of employment, the carnage really didn't reach its peak until about 2011, which is a long time after we saw the financial crashes.
And I think that, again, everyone wants to know what's going to happen now, today, this week, next month. But I've also started hearing some people I know going, well, my mortgage is fixed until next year. But even then, I'm worried.
Yeah. Yes, but they're not. And this is the thing. I think it's our society of haves and have-nots again. There are, looking at the credit card information from the Bank of England bank stats, there is no doubt that there are people out there currently struggling, and they are spending on their credit cards.
Yeah.
There are also people who are still saving. And although we are removing the savings mountain that we had over COVID, which at current speed would run out in November of 24, but actually I think will run out in March of 24, because we're going to see it accelerate as more people roll onto higher mortgage rates, etc. But whilst pay rises are still happening, and this is the first time, and you heard my theory earlier, I think that because the bosses now, many of them are millennials, and they know how hard they've had it. And they understand the cost of living crisis, and they have kids. And I think they are pushing for, I'm sorry, my workers can't afford to live, so therefore I'm going to give them a pay rise, which is a perfectly rational and good thing to do. But if you went back to certainly the 90s, most bosses went, no, you'll take a pay cut or we'll sack you. How does that feel? Which obviously had a much faster and more dramatic effect on inflation.
There's a comment here from Paul Cleverly, who I actually happen to know as an estate agent. And he said that if all homeowners lose their jobs, homeowners will be on benefits and support for mortgage interest will kick in. Actually, Paul, if you look at the qualification criteria for that, it's pretty stringent. Because you've got to qualify for universal credit first.
Yep. Which means you have to have less than, I can't remember, £16,000 in savings.
£16,000 in assets.
Yes, in all assets.
In all assets, yeah. There are a lot of people. It is absolutely not the case that anyone that can't afford their mortgage because they're unemployed is going to get the government to pay for them. That's just not going to happen.
The government can't afford it.
Well, I mean, A, the government can't afford it, but B, the criteria for that. I mean, there are areas where, yes, if there's high unemployment already and high universal credit already, and there are people who've got mortgages, they'll get some help. But again, it's interest only, and it's a loan. But it might, if it helps people avoid having their house repossessed. Yeah. Okay. Yeah. Okay. So, I mean, I've got to the point now where, the housing market now is looking to me like it's going to be worse than 2008 or the early 90s in terms of its downturn. And I'm not talking just about prices here. I'm talking about
duration.
I'm talking about transaction levels.
Yeah.
Which is a nightmare for everybody.
Yeah.
Like, everybody loses when transaction volumes fall. Everyone loses. And
what people don't do, Charlie, is they don't adjust transaction volumes for population. Except me, of course. So if you go back in the 90s, certainly, sorry, what I should say is between 86 roughly and 89, which was when Maris got knocked on the head for the two people. So it went down to one. The number of mortgage transactions when you adjust for population size was not far off the madness of the early 2000s.
Right.
Now, since then, as you know, our transaction volumes have pretty much halved and have stayed at half from 2010 all the way through until 2021, where they suddenly shot up again. But I agree with you. We've seen, a lower level for the last 12 years, 11 years, and we're going to see an even lower level again whilst this and even after this is going on. There are going to be far fewer houses per capita changing hands over the course of a year. No doubt about it.
Yeah. And this is, of course, a nightmare for everyone trying to sell.
Yeah.
And this is, I mean, I have people in my own family who, within the last week or so, have said to me, "Oh yeah, well, we're thinking about selling. Actually, we're thinking about we've heard that maybe the market isn't going to go up much more. Maybe it's time to think about selling." And I said, "Well, what are your future plans?" I said, we were definitely going to be moving in a couple of years' time anyway." Okay, well then I wouldn't wait. I said, "Oh really?" And you're right. You said it to me. There are so many people who just aren't paying attention.
No. No, I really wanted to.
And those people are going to come to the market. When you say to those people, actually, the housing market's already in real trouble. In the second half of last year, transactions came down and prices came down, and transactions are down this year 30% last year so far, and that's going to get even worse. They just sort of go,
yeah.
No, sorry, what? No, the market's been going up.
Exactly.
Everything's fine. And it's so far adjusted from where they are in their head in the property market that they just they go, oh, well, yeah, this is just some doom mongers, So I have an estate agent around who tells me what I want to hear. Yay, brilliant. But look at the numbers of people on the market not selling. And of course, none of the indices show this data.
No, I mean, the thing is, you can look at it locally. I mean, I do. I've got a number of areas that I look at on Rightmove just to see how many properties have come onto the market and all that sort of good stuff. But I think Best Agent is probably the only market tool that shows it across the entire market.
Yeah, it is. It's the only one I know of, and I know of all of them.
There you go.
I mean, there are people who have the data and don't publish it, but that's because they're owned by people in the industry and they don't want to publish it.
No. You don't
want to. I would like to offer everybody who missed our last live stream together the opportunity to buy Alex a coffee.
Oh, thank you. Oh, and again, thank you very much for everyone who did last time.
Yeah, but buymeacoffee.com/AlexGround, uppercase O, that looks like. That I haven't got a link in the details underneath, but I will put one on straight at the end of it. I wonder if I can. Yeah, I can copy and paste that into the comments.
Oh, thank you, Charlie.
There we go. Well, hey, you're just doing this just for love, so people can show you some love back. There you are. In the live chat is the link. If you wanted to buy Alex a coffee, or of course he will spend it on
he will spend it on booze. I just want to point out it's Monica who gets me the green tea. That's not my choice ever.
So Emma Anderson's point. This is something else I wanted to point out. Right, there are buyers watching this. Okay, it's frustrating. We have the deposits, we just can't afford the payments at these prices. That's true. And what you're going to see is, because there's this big time lag effect of interest rates feeding through to house prices, the cost of mortgage payments has gone up with interest rates before house prices have come down very far. And so, but what I think is that the mortgage interest rates might climb a little bit more this year, but not much more. I think and I hope we're close to the highs of mortgage interest rates. There might be another 0.5% or 1%, which would be awful if it happened. That would be brutal.
It really would.
But then what's going to happen is that I think the prices will start to drop quite sharply. In fact, this is what I was going to say right now. I have arguably better access to a broader range of what's happening at the front line of a estate agency than anyone else that does a YouTube channel, at least, right? And I don't remember I 2008, I remember clearly, okay, because I had hundreds of estate agency clients for whom we did photography of floor plans and EPCs, and we had a big team of people going around the properties, and I had, so we really we saw the volumes because the property volumes from the market were our business. And I don't remember in 2008 anything like the level of concern amongst estate agents that there is right now.
Okay, that's interesting.
Now, the really good and experienced ones, it's tough for all of them, even if they are good, because holding deals together. We did a live stream yesterday morning, 4 agents, and we had a guest agent on there. She's one of the best agents I know, and she just said holding chains together at the moment, where you've got to deal with other agents and other conveyancers,
Nightmare.
whatever. She said, we were promised an exchange a month ago. My client's asking why we're not exchanging, but it's out of my control. It's like, even for the good agents, holding the deals together now is the hardest it's been for 15 years. Excluding the blip of COVID, of course, but it's really difficult, and that's going to get worse for about another year.
Yeah, at least.
And it's very difficult for agents to hear that, because they're already going like, what, worse? Can't be worse. This is the worst it's been for 15 years. Shut up, worse. It's going to get worse.
Get worse. Of course it is. I mean, lots of people have asked. First of all, Arwen, the Bard. Yes, you can cash out premium bonds easily and quickly. Premium bonds are fantastic because it's always nice to get a little winner of a check from or an update in your account. Their payouts are not as good as they used to be in terms of the prizes you can win, but they're not bad. And certainly it wasn't a scam. I always found that I was getting a reasonable return. But a lot of your audience have asked about interest rates. And this is where it was easy back in August of last year to predict that interest rates were going to get above 5%. That was easy. You just had to look at the data. It's simple. Predicting when they will reach peak and drop, much, much harder. Now, I'm basing this, and as I've explained, I've been thrown by the wage increases. I didn't expect private sector pay to go up as much as it has. 10% in nominal terms. In real terms, yes, it's lost, but only down about minus 2.1%. I was expecting much more loss than that. However, coming at it from the other angle of how much debt we have, how many mortgages we have, which are going to roll off, the interest rate currently and the mortgage rates, all of these factors, my projection is that if the Bank of England interest rate breaks 6.5%, which is currently what the market believes is cut in, I didn't even extrapolate that far before. I only went to 6% because above 6%, everything starts to break, and I figured we go straight into recession. At 6.5%, I can't see how we get above that without everybody being massively impoverished to the point of having no food. And yet, talking to people who come at it from the other angle, so people like Charles Archer and a number of others who comment on your channel, who I have separate conversations with, they've convinced me that although they started believing that Bank of England rates could be up to 8%, they've come down a bit. They've come down to 7%. But they certainly think that somewhere between 7 and 8% is where they're going to land. I'm hoping not because I have any evidence that they won't, but only because it will do so much damage if they do get above 6.5% is the magic number where things start to go horribly wrong.
Yeah. So the Bank of England base rate is 6.5%. Above that, that's when it's a real problem.
Yes, which means that you would expect mortgages to be in excess of 7.5% potentially.
I find myself most worried for people who are subconsciously assuming that their jobs are really safe.
Yeah. I mean, anyone who thinks they have a safe job at the moment is mad.
Not anyone. I mean, there are some people who are going to have safe jobs, right?
Well, okay, yes. If you are a consultant neurologist
Yes.
or neurosurgeon, I should say, yeah, you're probably fine.
Yeah.
But anyone who works a run-of-the-mill office job
Yeah. So private sector, you're talking more about private sector. Well, I know you've got concerns about the public sector too.
Only the main civil service.
Civil service, so not the frontline services, but civil service. Yeah. Okay.
Yeah.
But in the private sector, I mean, it's when I think back to previous downturns and recessions, and I'm old enough to remember two big ones. Well, three, because there was the dot-com crash a little bit in 2001.
Well, for you, the dot-com crash was a little bit. For me, working in the IT industry, the dot-com crash was fairly severe. I was actually working at Cisco at the time it happened.
You know what that was? That was fucking karma for the whole millennium bug bollocks that you guys are putting out there.
It wasn't bollocks, but apart from that, Cisco's share price dropped from $80 to $12.
Wow.
Yeah.
Ouch. Yeah. And a lot of people, I mean, this is the thing, in 2008, loads of people who did, had no clue that their company, this enormous corporation they worked at, was at risk.
No. Well, but it feels sort of the same. It's different because the last X years have not been productive. I mean, this was the thing that a company like Cisco back in 2000, they had been providing all of the switches, routers, and firewalls for all of these startup .com companies, as well as then going into the giant sort of office sector. So they're making an absolute fortune, arm and a leg. And then, of course, all the .coms went bust. The data centers went bust. They weren't requiring any more Cisco kit. They had made projections of their sales, which were ridiculous and exponential. And they also treated the company like a country club. I had engineers at Cisco who were turning up in Porsche, a Porsche 911. They were basic engineers in the year 2000. So it was always going to happen.
I've got it. So there's a topic that I want to come on to with you as well, which is no, it's gone. I'll wait for it to come back. It will come back. It was to do with that KPMG study that came out yesterday with rising unemployment. But first of all, there's a question here. On Martin's show, so this is from SLB on YouTube. On Martin's show tonight, so Martin Lewis on ITV, he showed a graph projecting interest rates. I was surprised how far and quickly he thought they would come down. Could that still crash? So
capital economics are useless.
Okay, first of all, capital economics, they're not brilliant. But let's just assume that the interest rates do what capital economics are predicting. The reason that won't stop, first of all, stop using the word crash. Everybody, please. House prices never crash like stock prices do, or commodities, or anything else that you can trade on a day-by-day basis where the trades are closed out every day. House prices always slide. They're only retrospectively called crash, okay? And it's never a good word. It's just a clickbaity word. They slide at different rates. They slide more steeply. But even if interest rates come down in line with what capital, and I think they were forecasting coming down to sort of
2%.
Was it 2?
Yep.
But
I saw from what I saw on screen, it looked like 2%.
When?
In 25.
Yeah, 25. Okay, right. So what they're talking about is a sort of a gentle slide throughout 24 into 25, right?
Correct.
That will not prevent house prices sliding, because of the double whammy time lag effect of the following two things. Number one, the time lag effect on house price reporting, because of the time it takes to do a transaction. I'm going to do a video on this because I want to visualize it, the time lag effect. I got this idea of having a piece of elastic with 3 markers on it, which will be asking price, actual price, asking price, agreed price, actual price.
Mm-hmm.
And that, like, there's a point in time, but every transaction does that. So if that's now, each house is somewhere different on that scale, right?
Yep.
Okay, so you've got houses coming to the market now at an asking price, and the same day you've got house prices being agreed there, and the same day you've got house price completions at land registry there. But there are 3 very different points in the housing market, with like 6 months between those two, so 12 months from one side to the other. And if everyone understood that, I think I've got an idea how to visualize that in a way that will help.
Yeah. In terms of the long-term interest rate, just to answer some of your questions there.
Alec, can I finish just my...
Oh, okay.
Hold on. So the 2 reasons why, even if capital economics are right, it's not going to stop the house price slide that's happening now, is number 1, because of that 12-month delay in transactions and reporting everything else. And number 2, the additional delay of interest rate changes affecting the market. Okay, so if they were to slash interest rates at the Bank of England tomorrow, you wouldn't see house prices changing for a year. Okay, so there's this momentum. I mean, would it change interest? Would it change buyer interest? Yes, of course. And would it alter the course of where house prices are going to go? Definitely, that would happen if suddenly Bank of England base rate was 2% tomorrow. That would definitely be changing what house prices will be a year from now. But it just takes time to feed through the system. Okay, because the people who go, oh, I'm going to get a mortgage at 2% today or 3%, whatever the new low hypothetical rate tomorrow would be, wouldn't actually complete on their transaction for a year.
Yep.
So, this is why, and a lot of people are looking at these thinking, oh my God, there's news, right? House prices are going to be fine again tomorrow. You've got to, so we know, I mean, as near as damn it, we know that the interest rates will not be reducing this year. You then factor in the 12-month delay of transactions, which means that we know house prices are not going to start to recover for 18 months. That's you heard it here first. You really did hear it here first. Sorry, Alex, what were you going to say?
Oh,
what's the question?
Only that long term, anyone who's banking on the idea that by 26 interest rates will be 2%, I think you'll be disappointed. We've been through this on a number of videos. Historically, interest rates for over 100 years were 3.9%. Then they were massively above that, between 5.4 and 11.4% on average over the 60s, 70s, 80s, 90s, and up to 2000, 2008. And then we've had the only 0.5% over the last 15 years, 14 years. The only time that ever came close was during the Second World War, where we had a fixed rate at 2%. Rates will naturally, and this even weirdly, I find myself agreeing with private bankers who friends have spoken to, and they said, God, Alex, I had a chat, and you know what? My banker says that he agrees with you. 3.75 to 4.25. 4%, he said. So, not that I normally put much stock by bankers, unless, of course, they agree with me, in which case they're fucking wonderful.
So we got someone here. We overpaid as optimists last year. Now taking the strategy of assuming we're buggered and trying to plan accordingly. Wise move. Building second jobs, upskilling, saving, and hoping it's not as bad as we plan. That's the best you can do. That's the best you can do. And good luck to you. Very, very good luck. I hope you can weather the storm and come out the other side still holding your home.
Yeah, absolutely.
What was that? There was one other topic I really want to discuss with you on the economy. Oh yes, that's right. Pensions.
Oh God.
So yesterday,
No.
the government announced that 90% of pension funds or something have agreed that they're going to put 5% of their pension funds into startups.
Not just startups, life science and tech startups. Some of the most risky startups of all. I mean, you've seen that Dudley Moore and Peter Cook sketch.
Which Dudley Moore and Peter Cook sketch?
The one where he goes, I'll tell you what, I'd like to be the best hunt kicker in Britain. I would kick him right in the hunt. And they would come to Guinness Book of Records. They would come to me and they would say, do you know what, Peter? You are the best hunt kicker in the world. Yeah, I mean,
right. I'm going to tell you something, okay? I have spent my entire working life, except for my 3 years in the city, I spent my entire working life in the startup environment. I have successfully negotiated investments from venture capitalists of all sizes, individuals, angels, small private VC firms, up to Britain's largest venture capitalist firm, as it was then, 3i. I must have been in, well over 100 investor pitches and spreadsheets and business plans and decks and all that kind of shit, which thankfully I haven't had to do for 7 years now. And the one thing that no one ever talks about in the media when they're discussing about, well, they're going to, I mean, that, did you hear them talking about, oh, it's going to be the new Silicon Valley. We're going to have Silicon Roundabout in
God.
Shoreditch. Fuck off. I mean, honestly,
You say estate agents talk guff about housing? Not as much guff as that.
You cannot create a Silicon Valley because you decide you want to. No. They evolve organically out of nothing. Silicon Valley started in the 60s or thereabouts was when it first started being talked about. And it was started by hippies.
Yep.
Right? And the banking community fucking hates hippies. And now all of the hippies from Silicon Valley have gone, well, fuck this for Game of Soldiers, and they've gone to Austin, Texas.
Yep.
All of them have gone because Silicon Valley got taken over by corporates and nobody wants to work there. And I was there in 2016. I went to California. I was in Santa Cruz in particular and Cupertino. And I was looking about where I was going to start up Best Agent software team. And I wanted to find the world's best software developers. And as it turns out, they're in Portugal. And that's why my software team is now in Portugal. But while I was there, I met some investors and some techies, and I realized in 2016, it's gone. The ship sailed. Silicon Valley is over.
Yep.
And that was 7 years ago. It was really clear. I was like, it's all over. It's gone. The corporates have killed it. The magic that created it is gone. Mm-hmm. The innovation is gone. Corporations are the nemesis and antithesis of innovation.
Yep.
With very rare exceptions.
Yeah. The moment that you are going to private equity firms and to venture capital so that you can put yourself in a shiny, $500 million funded headquarters rather than working out of a sweaty garage in the first software and hardware items, then you're screwed. Your company, it's never going to work.
But the point is this, right? What I've learned, I have employed, both directly employed and outsourced to freelance software developers all over the world for over 20 years.
Mm-hmm.
I never talk about this on this channel. No one knows it, right? But that's what I've done. In over 20 years, I have almost everywhere in the world, I have worked with software developers. And what I've learned, which has led me to be able to build the biggest and most advanced piece of tech in the property industry ever on a relative shoestring budget, is that success in tech startups, and I'm talking about software specifically, right? I don't know anything about hardware. That's a different ballgame. I don't know anything about it. But success in software tech startups comes down more than anything else to the motivation and culture of your coders.
Yeah.
The motivation and culture, not the skill level.
No.
If they love what they're doing and care about what they're building and are excited by it, even perfectly ordinary skill level software guys will deliver magic. Absolute magic. And you cannot simply buy, and this is where the corporations go wrong, you cannot just get your checkbook out and buy talent.
No.
Because if they aren't motivated to use the full power of their enthusiasm and passion when they're coding, you'll get mediocre at best. So, and I'm sorry, but in the UK, and I actually think this is going to upset so many people, what I'm about to say. UK investors, well, certainly all the UK investors I've ever met, do not understand software investment in the way Americans understand software investment, which is why the UK has never had a software unicorn.
No, you see,
it's never had one.
No, but let me put it this way. Part of the reason I believe it's a little like the reason that certain bands go to try and break America. Because if you get a hit, and I'm going back now before iTunes, but if you had a hit in the UK, you might get 100, 200,000 pounds. If you had a hit in the US, you were guaranteed to make 2 to 5 million.
Yeah.
Now, partly just because it's a bigger market, but also the Yanks are more willing to go and spend. And the same is true. They've got lots, because of their 401ks, they've got lots more little investors that are growing in the UK now.
Yes, sorry, that's true, but I'm still saying there's a culture problem because Skype came out of Germany, Spotify came out of Sweden, something called Whereby that I use came out of Norway. So it's not only America that does them.
No, it's not. But the Americans do it mostly because they don't appear to mind losing all their money. Because look at Theranos. If you look at software or biotech, they invest in some really bad companies.
We're getting off topic here. Oh, thank you, Alexander Jones. It's yeah. That's nice to hear that feedback. We're getting a bit off topic here, but this is why I don't. I mean, first of all, I think it's outrageous that they're going to start gambling pension fund money.
Oh yeah. Oh god.
On software startups. But I'm telling you that I've met hundreds and hundreds and hundreds of UK investors. I've been to investor seminars. I've been to investor, networking evenings. It's hideous, and I can remember when before Facebook listed and when it was private. I remember roomfuls of investors in England, London, British investors guffawing with laughter at how Facebook could never make any money. They just don't understand it. Those hippies. I mean, how can you monetize traffic? they,
Yep.
British investors, in terms of startup software investors, if they cannot see value in a line on a spreadsheet, it doesn't exist for them. They cannot understand all of the other nebulous forms of value that exist. Anyway, that's that. That's my point made. And actually, it's time for us to wrap up soon, I think. I had a couple of questions I do want to ask. Dennis B says Skype came out of Estonia. Okay, cool. Well, that's oopsie, wrong. I keep clicking.
The Estonians are very tech savvy.
Yeah. That doesn't surprise me. It didn't come out of London, though. Nothing's ever come out of London, out of the UK.
Message Labs.
Message Labs? Is that a consumer tech brand that anyone's ever heard of? I'd never heard of Message Labs. Well, I don't know. Maybe. Okay, fine. It's not like a household name, is it? But
no, that's because they do all of your email checking.
Okay, so B2B stuff.
Yeah.
Right. Okay. All right.
No, not consumer.
Yeah. Okay. There was a question I saw, which I think have I pinned it? Yes. So Dave Spiegel says, when are you going to release the data set behind that lovely best agent figure? When I can. I'm very, very happy to make the entire best agent data set down to a granular level publicly available, but not yet. It's when we can, when all kinds of things happen, when we've reached certain levels of stability, etc., etc. We've got time to do that kind of stuff. But it is ultimately my ambition and desire and goal to make the entire data set publicly analyzable, which I think is a good thing, isn't it?
Yeah, it'd be fantastic. I mean, I'll be playing around with it.
Yeah. And another question. Charlie, if you're planning on upsizing, when do you think the time to strike would be in general? Okay, so now is a great time for upsizers. And the reason it's an especially even better than usual great time for upsizers is because higher value properties are coming down in price faster than lower value properties, because I think we're going through the great downsizing at the moment. The great downsizing is resulting in people selling up the bigger properties, moving down to smaller, cheaper to run properties. And that's why there's an uncomfortably high amount of competition for the cheaper properties.
Yeah.
But none of the downsizers are fools and none of them are overpaying. So as an upsizer, to answer your question, just take your time looking. I'd be out. I wouldn't be waiting. Assuming that upsizing is something you want to do and you don't want to delay unnecessarily, be out there looking, because you've only got to find one property you want to upsize to, and then it doesn't matter if your property you're selling is going down in value, because the property you're buying is going down in value faster and by a larger amount. So just at leisure is my answer. When do you think? At your leisure. Just enjoy the process. If I was an upsizer, that's what I'd be doing. And were there any other questions? Were there any other questions you wanted to answer?
No, I haven't seen any.
Chelsea Clement says, didn't the UK invent the internet? Whatever all is based on.
Didn't make any money.
You need to watch a series called Halt and Catch Fire on Amazon, which is one of my favorite ever TV series, which was done by the same people that made Mad Men. It was a guy, and so what's his name? Tim Berners-Lee.
Berners-Lee.
But actually, it had
And
been
it
evolving for quite a long
wasn't
time.
the internet.
No, he was the World Wide Web, wasn't it?
Correct.
So, but he gave it away. So no money made out of it because we're very British. We don't want to make money.
He created it whilst working at CERN so that they could have visual exchanges over the internet, which had existed for a long time, was created in case of nuclear strikes to be able to route data to multiple points so that you couldn't disrupt an entire country just by hitting one place. But yeah, he gave it away.
Andrew Lamb says the UK invented the mouse, I think. Nope. Hewlett-Packard invented the mouse. They did it really badly, and then Steve Jobs happened to see it in there when he was taken as a guest in their experiment. And he went, "That's a fucking brilliant idea, but I can do
I'll have that." Yeah.
And he actually, because the Hewlett-Packard mouse was like hundreds of dollars and was clunky as hell. And in Steve Jobs' style, he was one of the great plagiarists of all time, I think. But he took a great concept, but did it better and made it like a $25 thing instead of a $250 thing. But I think, hang on, if I'm giving advice for you, okay. Oh yeah, The Big Short. Anyone who hasn't seen The Big Short? If you haven't seen The Big Short, it's a relevant time to watch The Big Short.
Oh yes,
timing is perfect. And I'd like to wrap this up by making the following statement. It would be boring to explain why, but due to my career and varying parts, in fact, all of my career, I have got an unusually unique perspective on the housing market. And that allows me to see what's happening a long time, not specifically in but overall generally, it allows me to see what's happening a long time before other people, including other people even in the moving industry. Which was why I was able to see last May and February, first of all, and then May, and then in August put out the video, which is 8 Reasons UK House Prices Will Collapse, a year before they have really begun to do so. And what I'm hoping, the reason I'm saying this now is that I'm hoping that people who've been watching for a while with cynicism will just start to give me the benefit of the doubt and just consider what I'm saying, because I'm not making this stuff up. And on that happy note, Alex, thank you very much indeed. Thank you everybody for watching. Have a great night. Lots more to come soon. We might be doing a legal clinic with a guest conveyancer on tomorrow night. We'll be confirming that in the morning. Watch out if we are. Have a good night, everyone. Thanks a lot. See you on the next one. Thanks for coming, guys. Bye-bye. Don't forget to buy Stig